Right. So I created this ICT video for the following people. Traders who want to be able to pass prop firms and do this consistently, but also traders who need a strategy that works with a busy work-life schedule. But also traders who don't want to be on the charts all day and have a strategy that requires you to only be on the charts at the same times every single day. You can also execute based on alerts that you set. Traders who want something simple, traders who want a strategy that is mechanical without the guesswork. But also, it's going to help people that are struggling to be profitable overall and need a blueprint to trading consistency. If any of this is you, then you really want to be watching this video all the way to the end and take notes. Don't skip anything. If you want to be successful with this method, you're going to need to watch the whole thing. And if you don't watch the whole thing, you're going to struggle with this, all right? So I'm going to break down a strategy that is so mechanical and so simple that you'll be able to execute the exact same trades over and over without any hesitation, knowing that you have an edge in the market. The strategy is basically based on the teachings of ICT, but I have added elements from my own experience in the market for the last 5 years. The strategy works and is highly profitable. It has a high risk reward. And so it's important that you know that you may take 3 or 4 losses in a row, and this is completely normal. The win rate is generally lower on a strategy that has higher risk reward, but one thing has become extremely clear to me. If you want to be successful in this game long term, you need a strategy that has a high risk reward ratio, even if this means that you have a lower win rate. So my conclusion was really cemented when I watched an interview with Angelo from The Funded Trader, where Angelo mentioned that they see the same trades over and over. Consistent traders that are consistently withdrawing from The Funded Trader, they saw this. They have a high risk reward ratio. So with that in mind, I created the system based on ICT concepts and liquidity. And the results really shocked me. And after rigorous testing, also I suggest that you collect data on at least 100 trades like I did before executing or testing live. I was able to make in testing about 76% in the last 4 months, the most recent months. And like I say again, please do not do this without going back in time using bar replay or whatever testing software that you want to use, because it's going to make you much more confident in the strategy, and you need to prove this for yourself before you get started. So what I'm going to do is test this on some random live data, okay, on TradingView, and I'm going to see if I can pass a prop firm challenge. Let's see, why not? So let's hop into it. A lot of people ask me, what is my favorite prop firm to use? And the answer is simple. It's Blue Guardian. Blue Guardian has the best prop firm conditions of any prop firm I've used to trade with. And they allow you to take an unlimited amount of time to pass their evaluation. Not only this, but they give you the Guardian Protector, which is a tool that stops you from hitting your max daily loss. You can also set it further down to stop you from overtrading for that day. It simply cuts off your MT4 account and you can't continue to trade if you hit more than that loss. If you want to use the prop firm that I use, click the link down below and use the code GARTRADES to get 10% off your purchase. Let's continue with the video. Right, everyone, so let's get into it. So essentially, this strategy, the beauty of it is that you can set your alerts, go about your day, and when the alerts go off, you can look for your execution criteria and hop into the trades. It's that simple. And you just need a few things to get started. Essentially, we're going to start with indicators. So the indicators we use is ICT Midnight Open, NY and GMT, this one here. Okay, so you're just going to search ICT Midnight. This one here, right? Okay, and let's have a look at the settings for that. And essentially, it's this easy. You switch off the GMT line and you just keep the New York line on, and you can make it whatever color you want, right? And then click OK. Then we're going to use the sessions indicator by Oro Rocks. It's one of my favorite ones. So it's this one here, which will make your charts look like so. This is the sessions. And then the midnight is going to be this orange dotted line. So let me just hide that for now. Right, so the sessions indicator by Aura rocks. So sessions, it is this one here. All right. Now for this one, you're going to use these specific timings. Okay. So this is all in New York time. Okay. And we're only using London and New York session. So you switch on London, New York, and you switch off Tokyo and Sydney. All right. So for London, it's 3 to 7 a.m. Then for New York session, it's 8 a.m. to 12. Okay. Now, just bear in mind with these time zones in the strategy, I'm a little loose with them. I'm okay an hour one way or an hour another way. Okay. But I mean, we don't like to trade when there's less liquidity, but I am a little loose with these timings. All right. It just helps me as well for when I'm backtesting, and for when you're backtesting at home, you can see when the session's starting. You're not just taking trades blindly. All right. You can be like, hey, I'm kind of close to session, so maybe I can take this trade. Or, you know, the session's closed now and there's not much time left, so we're going to go into Asia session. I don't really want to trade with low liquidity. All right. Now, the pairs that this works on and that I've tested it on so far is GU, which is currently my favorite. EU is also brilliant, the original pair that I started using this on. And S&P 500 apparently also works really well. I had a lot of people messaging me telling me that S&P 500 is working amazingly. Right, now the session timing, okay, we've gone over it. Essentially, you're going to want to only trade New York and London, okay? And those are two sessions you're going to trade. And you need to make sure that your charts are on UTC -4. It just makes it so much easier, okay? New York time, all right? As for these indicators here, you've got everything in New York time already, all right? So essentially, you need to just make sure that you bear that in mind. If you are trading in a different part of the world, you can convert all of these New York times by simply using Google and typing in the time where you're at, converted to the times that are in New York, all right? But New York is just easier to use. So let's move on to the next section, which is essentially the setup, right? So the setup on this is essentially this. The indicator is going to plot out, so the ICT midnight open is going to plot out the midnight opens. What you're going to do, if this is current price, we're looking at the previous day, okay? And so, as you can see, this is what price did, okay? It chopped around a little, and you can see that this here is the highest that price went yesterday, between midnight and midnight, all right? So we're going to plot that out on the chart, okay, the lowest and the highest. I'm sure there's an indicator that does this. If there is an indicator that does this, let me know in the comments below. But I simply just mark out the highs and lows manually. And so, yeah, I'm sure there is an indicator that does this. So let me know in the comments down below if there is one, and which one is your favorite. I'm sure there's multiple ones. So once you've plotted this out, you wait for price to play out the following day. And you set your alert at this time, right? Once your sessions start to get close, you set your alerts at these levels, both here and here, and you wait for one of them to trigger. All right? It must trigger, well, it doesn't need to trigger between London and New York. So if, for example, it triggers a little bit before, that's fine, as long as, you know, the setup happens relatively close within London. Like I said, if it's a little bit before, that's okay. Even if it's in this dead zone, it's still okay. This is mainly just a reference point to show me, hey, I'm not trading an Asia session, okay? I'm not trading in a random place. But if it's like a little bit an hour early or even in the dead zone, it's okay. I preferably don't like to take trades too long after New York session because obviously there's not much time left. This is going to be Asia session, all right? So try and keep it within this general area, but I'm pretty loose on that. You'll see when I test this. So essentially, that's what we're looking for. We're looking for a break of this. And then we're going to look for our setup, which is essentially going to be a change of character to the downside, all right, which I will explain. It's a fractal change of character. So it's not necessarily like little internal structures. It's actual fractal structure, which I will explain in detail right now, directly after this in just a second. So we're looking for a fractal change of character, which is essentially just showing a market structure shift. Like ICT says, I've got a specific mechanical way that I use to determine this so that it takes out all the guesswork. And then once we have this market structure shift, all right, where the highs are taken, okay, this high is taken and the low is taken, we can then look to get in on the fair value gap that is at the extremity, all right? So if we've got multiple fair value gaps, all right, like so this is one here, this is one here, and this is one here, okay? We're now only going to use the top one, all right? We're going to, so in a short position, remember this, in a short position, we are only using the top fair value gap. In a long position or a buy, we are only looking at the bottom fair value gap here, okay? Not this one and not this one. The ones on the extremity, okay? So I hope my wonderful drawing helps and makes some sense of this. And so that's essentially it, all right? And once we get into these trades, we are targeting 1 to 2.5 risk reward. So essentially, I'll move this out the way too. So essentially, structure is going to look something like this. Whoops. Let me just get everything back. Right. So essentially, structure is going to look like this. So you have the previous day's highs, midnight to midnight, all right, which is your midnight will be here and your midnight will be here, all right. And then you've got price that's ranged around a little like this, and it's come up and done this, all right. And so your lowest point is right here, and then here in session we have price breaking out. And now what we're looking for is the change of character, okay? But we're looking for a fractal change of character, okay? And this is how I do it. Let me just move this. This is how I do it. So what we're looking for is the most recent candle. So if we are going short, okay, if we are selling, we're looking for the most recent candle that did not take the previous candle's high. So essentially, the last candle that did not break the previous candle's high will be a potential low, okay? Now, the low of that candle becomes the low. And I'll show you what I mean in a second. But the low can only be confirmed once the highs are broken. So remember, a change of character is essentially this, okay? The highs are taken, which then confirms this as the low, okay? We cannot have a situation like this where it's like this, okay? This is not a low, all right? That does not count as a change of character because the highs were not taken, okay? So we need a situation where the highs are taken, which confirms this as a low, all right? And then the lows are taken. That is a change of character. Highs are taken and then lows are taken. All right? And this must happen fractally. So let's have a look at how that looks. So we take the previous day's high, which is our liquidity point, but how do we know that there is enough liquidity there? We need to see this fractal change of character, which is an early sign of a reversal. Okay, and then I'll tell you about how to figure out the next point. The next confluence in the strategy. So price continues and price takes this candle here, takes this candle's high. This candle takes this candle's high. This candle takes this candle's high. This candle takes this candle's high. So currently we are in an uptrend, okay? There's no indication that we're now going to change character at any point. However, we then get this candle, which does not take this candle's high. This candle's high has not been taken by this candle, all right? And this can also be a inside bar, which is essentially a candle that is wholly within, okay? And so, but let me, for this example, keep it like so. We then have this low as a potential, we have this low as a potential low, okay? This is not confirmed yet. It's only confirmed once this high is taken out. Remember, we're looking for the highs to be taken and then the lows to be taken, all right, for a change of character to take place. So we wait for this high to be taken. Once this high is taken right here within this candle, here, the high is taken, all right, we can then confirm this as a low, right? Confirming once again this pattern. The high is taken, so let me draw it on here for you. Here, the high is taken, here, okay? And then we're waiting for the low to be taken, all right? So it's actually more like this. Okay, the high is taken, and now we're waiting for the low to be taken. And that will be our change of character. That's when entries start to become potentially valid, but we're waiting for one more thing, which I will show you in right now. So essentially, this is what it will look like. Okay. So we have another candle like so. It will actually probably be more like this. All right. Anyway, we then get the break of the lows. Okay, so we've had a break of the high, which then confirms this as the fractal low. The fractal low is then broken. Okay. We then are waiting for two things. We're waiting for a displacement. Okay. Displacement. We are then looking for a fair value gap, which is where we enter on. Now, displacement simply means that price moved with some aggression, which, as you can see by these two bearish candles, there's some momentum behind here. So you would like to, in relativity to the previous price action, you would like to see price moving quite aggressively, which just means that the candles are like 80%, 70% bigger than the others. It's not, you know, that's one of the things that's a little subjective about the strategy, but probably one of the only things, all right? So once we've had this change of character here, okay, right, exactly like the drawings I drew for you, we then are looking for this displacement, which is just some nice momentum to the downside relative to the previous price action. You can see that momentum really kicked in, all right? Not a huge must, okay? It's just a nice thing to see. It's a nice confluence. It's a bit subjective, but you know, you'll see as well in the examples, and most likely I'm going to be taking just everything that shows up regardless of the displacement, but the displacement is gives me confidence in the setup. Right, then we're looking at the fair value gap. Now, what is a fair value gap? It's simple. So we're at price currently, we're here, okay? We're then looking at the most recent 3 candles to see if there's a gap. So we've got candle 1 here. Okay, this one. We've got candle 2, this one. And we've got candle 3, which is this one. Okay, so 1, 2, 3. Right? So we're looking for a gap in price. So let's say this candle has a wick. Let's be a bit more realistic. And this candle has a wick here. Okay? So price moved down very quickly. And essentially what we're looking for is price once price moves with the displacement. That's why displacement is nice to have. The market makers, or the algorithm, as ICT likes to call it, they like to come back to rebalance this. Essentially, this has made a nice big move, but there's a whole bunch of orders that are left right, in these gaps that have not yet been filled for these big institutions. And so we're looking for this gap here to be filled. So it's essentially the gap between candle 1, the low of candle 1, and the high of candle 3. Okay, so between these three candles, we're looking for the gap where between candle 1 and candle 3. Okay, and it's the same for bullish. Obviously, it's just flipped around. All right, so I hope that helps you guys with the fair value gap. And then this is fractal structure, and this is the change of character. All right, so those are the key elements to the strategy. So we're looking for what? We're looking for a fractal chalk, okay? And that's after we have a breach of the highs, okay? So a raid of highs of previous day highs, which is again midnight so it's midnight New York to midnight, okay? Midnight New York to midnight New York, right? So we have a raid of the previous day's highs. We have a fractal change of character. We would like a displacement, okay? And then we want a place to enter on, which is the fair value gap, right? And that's where price gets rebalanced. And simply, our entry is going to look like as follows. We're going to enter at the bottom of the fair value gap, or if we're going long, at the top, okay? So let me get the tool out. Right. Whoops. Don't know why it's so small. Probably just zoomed out way too much. All right, so our position will look something like this. So for this short position, we would get in here at the bottom of the fair value gap. I like to give a pip of breathing, of front running, just in case price, and price sometimes does this, especially if there's an aggressive move with good displacement. It'll just miss this fair value gap and then go. So I give it a pip front running, and then I also give it a pip breathing room at the top. And we want to have the full top covered, okay? The full top, so the full swing covered at the top here. All right? And we just give it an extra pip at the top, okay, as well. And then we're going to target 1 to 2 risk reward ratio, right? So 1 to 2, so 1 to 2.5 risk reward ratio. Once that's done, okay, and we're in the trade, essentially management is very simple. We do not manage it much. What I do is I set an alert. I set an alert at roughly 1 to 2 risk reward. So down here, and then I go break even at 1 to 2 generally, okay? But you can essentially just set and forget this, all right? I just do this for my psychology. I just set break even at 1 to 2, especially if I've been waiting really long for this trade to play out, all right? And that's pretty much it in a nutshell, guys. So hopefully that makes sense. We're going to hop into the practical demonstration now, where I'm going to show you it play out on charts on the most recent price data from August, and we'll see exactly how it goes. I'm going to take pretty much every trade I see and just show you how it plays out, and try and get as close to 8% as we can and pass prop firm challenge virtually. So let's hop right into the demonstration. And now what we do firstly is mark out the high of the previous day, which would be here. So between the orange line and the orange line, all right, we would mark out the high. Okay, and once again, this orange line and orange line is it comes from ICT New York and GMT open. Okay, ICT midnight, right? So you just search ICT midnight. It is this one here. Okay, so you use this one here, click on settings, switch off the GMT line, all right, and make sure only the New York line is open. You can make it whatever color you want. And then I'm just using the sessions indicator as I would have shown you. You can see that I'm just using London and New York session, and these are my timings, all right, within New York session, okay? So we would mark out the highest point between the orange line and the orange line, okay, which is here and here, all right? We then get the lows swept, okay? We were actually a bit disorganized with that. We then drop down to the 5 minute. Now, what I can see right away is that this trade was a loser. So let's go through it. So when the line was first broken, the lows were first broken, it was here, right? We then look back. This candle took out this candle's low, right? Here. This candle took out this candle's low, right? Here. This candle, okay, sorry, this white candle here did not take out the previous candle's low. And so that, for me, tells me that this was where my high is. You can then see price came up, took out the high, all right? Once that happened, my change of character was confirmed. And this is the most extreme fair value gap that we would have entered on. Price would have tapped into it, reacted a little, all right? But then came out, took our stops out, all right? So once again, because this is a buy trade, a long trade, we would go for the extreme fair value gap at the bottom. All right, let me draw that out a bit more clearly for you. This is the fair value gap at the bottom. This is another fair value gap above, but we would not take that because we're only taking the ones at the bottom when we are going long or buying. Okay, so I hope that is clear to you guys. Now, so this trade here would be a loss. We would get in at the top of the fair value gap that was formed at the extremity, stops just below, and the stops were just grabbed. I believe this one goes on to working out anyway. So we then go back to the 1 hour and we wait for either the highs to be taken or we just wait till the next day. Okay, so it continues lower and we go to the next day. Now, if you guys watch my video, my previous video about the Judas chalk, you can also trade the Judas chalk on this. So go to my previous video. I will link it down below. All right. Go and have a look at that. You can also trade that with this, but I have left it out for this particular test because I don't want to complicate everything even further. So we look for the highest point as well, which is right here. Okay, let's get rid of these previous ones. And the lowest point has already been taken right here. Okay. We then go on to the 5 minutes. Okay, so it's taken right here. So let's look back. Okay. So this candle took out this candle's low. This candle took out this candle's low. This candle did not take out this previous candle's low. And so this would be the high. If we go back, you'll see it's the same thing. This was the last high, okay, but we continued lower because we did not come up and break, so there is no change of character. There is no change of character here, so we are hoping now for a change of character here, okay? So that's what we're looking for right now. We continue lower, okay. So technically here we have a change of character. Why? So let's look back. This was the lowest point. This candle did not break this previous candle's low. Okay. So this would be the fractal high. The fractal high was taken out. That's our change of character, but there is no fair value gap yet. So we need to wait for a fair value gap. We then go lower. Now, once we go lower, we need to look back once again. This candle does not take out this candle's low. And so this becomes our fractal high right here. So we need that to be taken out. Okay. Which it does, and there's a fair value gap right here, which is the extremity. There's no gaps within here. So we would enter right here with our stops just below. All right. And we target, okay, we target 2.5 risk reward. And we let it run. We don't manage it in any way. When you get to 2 risk reward, you can go break even as well. Okay. So now we're waiting And I don't believe this one tags us in. So yeah, we're out of session now anyways. All right. So that one doesn't tag us in. Okay, so far we've taken one loss, which was the previous day, somewhere here. So let's go on to the next day. Right, so we've got the lows right here, and we've got the highs over here. So it looks like the lows might get taken. So let's see what happens. The lows get taken. Let's drop down. So as soon as the lows are taken, we then start to analyze the candles. So all of these are taking out the previous low, except for this one. Okay, this candle does not take out this previous candle's low, as you can see. So this immediately becomes our change of character point. All right. And we get it, and we get a nice big move. So the fair value gap would be right here, and we would enter like so with a pip of breathing room right here to the upside, okay? And then we give a pip at the bottom as well, okay? And then we target 2.5 risk reward. Okay, we're in and we're out. All right, so we take another loss, right? So you can see I'm not cherry picking these trades. We've taken 2 losses right off the bat. Let's go on to the next day, or if we get a sweep of the high within this day as well, we can look at potential trades. Okay, so we continue. Now the next day has opened. All right. The highest point would be right here. If we look between this and this, the lowest point is right here. Okay, so now we're looking for either one of those to be rated. We'll set our alerts there. Right, so the highs get taken. What we can see immediately from the highest point, once the highs get taken, this candle did not take out this previous candle's high. Okay, and so this becomes our change of character point. Okay, so then it gets taken out. We then enter. This is the most extreme fair value gap right here. Okay, so that is where we enter. I did go a bit further, but this 1 hour candle does jump a little. So once again, we move this just to be completely mechanical, 1 pip ahead, and this we move 1 pip ahead, so 11.3, and then we target 2.5. So let's see, it's either going to hit stop loss or take profit. Okay, that got very close to stop loss. See, as you can see, I didn't hindsight this. Okay, so we take a loss on this trade. But as you can see, it did react nicely from this point. If we were targeting 2 risk reward, we would have won the trade. But we always target 2.5. Right? Once you get to 2, you can go break even as well, but I did not state that right here, so I'm not going to cheat myself and say that. So this is a losing trade, but as you can see, it does arguably work. So 3 losses right off the bat. All right, so like you can see, I'm clearly not cherry picking anything here. Let's go to the next day. We've now got the highs and the lows. This is the lowest point and this is the highest point. Okay, that's very clear. Now we're looking for either one of those to be taken. Let's see if this happens now. Okay, does not happen. Now we've got new ones, which is right here, between here and here. We've got this as well. The lows get taken. We drop down to the 5 minute. Let's extend this across. Now, right here, this candle does not take out this previous candle's low, so our change of character point would be above here. Okay, now our change of character point moves down to here because this candle is the last candle that did not take out this previous candle's low. It moves now to this candle because this candle did not take out the previous candle's low. Okay, so that's our change of character point. We then get the change of character. Now we're waiting for the fair value gap. Okay. Okay, so there is a very small fair value gap within here. Doesn't matter on the size of the fair value gap as long as there's a gap. So right here, there's a gap right there. We will then place our entry right here. Give it a pip extra just so we get tagged in, and then stops below. Whoops, stops below. So 17.6. Right. And then we target 2.5. Do we get tagged in on this one? Yes. Okay, cool. We now in some profits. Okay, very close to TP. And there you go. So we finally have our winner. All right. And this is very important for you guys to see. This is what real trading is like. You take 3 losses in a row, completely normal. You just let your edge play out, okay? You know, it's a statistical thing, and our brains are not trained to think statistically. And you need to train yourself to think statistically. And once you do that, your psychology will be fixed. All right. So we get a win on that. Let's go to the next day. And this, yeah, both sessions are done. Okay, so the highest point of the previous day was right here. Okay, this was the highest point. Our lowest point is right here. Okay, so we actually did just grab the highest point right here. So let's analyze this. So the highest point was grabbed, and so the last candle that did not take out the previous last candle's high would be this down here. Okay, as you can see, it did not take out this candle's high, and then we took the highs. Okay, yes, right. However, I'm wrong. This candle did not take out this candle's high. Okay, this candle did not take out this candle's high, and then we took the highs, right? So as you can see, price essentially did this. Okay, and then it took this out. And that is a change of character. Okay, so you can see that right here. Okay, now we look for the fair value gap. Okay, now the fair value gap, this is the only gap that we've got here at the extremity. So, and we're at that price right now, so you can't tell me I'm trading hindsight. Especially since the last one, if it won, you probably would have said it's hindsight, but it's still lost. So I guess there's no risk there of you saying it's hindsight to me in the comments. We've got entry here. We're giving it a pip of for front running so that we get tagged in. Stops above the highs by 1 pip, and we target 1 to 2.5. Okay. So let's see this one, and it works pretty damn well. So there you go, 2 wins in a row after 3 losses in a row. So we would now be up 2%, I believe. Let's see if we take out the lows on the same day, because this was London session. All right. So let's see. No. Okay, so the day is done. We're on the next day now. There's the lows. And the highest point is here. Whoops. Okay. There you go. The highs are taken. Let's go to the 5 minute. We actually have had the highs taken. Okay. This candle here did not take the previous candle's low. So it's a very expansive change of character. We took the highs. This candle was the lowest point that did not take out the previous candle's high. We then took that, and our fair value gap is right here. Okay, so we would be entering right here, even though price would be in drawdown right now. Give it a pip of front running, and then a pip above the highs. Okay, which is 43 pips. Okay, so this trade might be running for a while to get to a target. 2.5. And that's it. Okay. So we get a reaction there. That was very close to our TP. That was micro pips. And in fact, I had it a little bit too big. But let's still see, because I'm not going to do any hindsight here. let's go into the 1 hour. Well, we're on the next day now, so I'm going to go into the 1 hour regardless. I'm going to mark out the lows, which is right here. Okay, whoops. Tip, use the shift button to make your line straight. So if you're drawing a line and you press shift, it will make your line straight. I'm going to move this to the high, which is up here, all the way up here. Okay. So let's see if we take out the lows, which I hope we do. Okay. Wow, it really did not want to take out those lows. Okay, there. So we take out the lows, which is basically the same as the previous day's lows. So this ends up winning for us. So now I think we're up 4.5%. All right, we're getting pretty close to current date. Current date is 18th of August. We're now on the 14th of August. So we take out the lows, which are right here. This is between the orange line and the orange line. This is the lowest point, right? So we go to the 5 minutes. So we're down here. We're looking at the last candle that did not break the previous candle's low, which would be this one here. As you can see, it did not break this previous candle's low. So this is my fractal high because we've now come down lower. Okay, we continue lower. And so now this up here will become my fractal high because you can see this white candle did not take out this previous candle's low. And then we took out the lows, okay? This takes out this candle's low, so that is not... Now we move down more to here. Okay, are we going to get a change of character? We do. Do we get a fair value gap? We do. So now we're going to look to enter on this fair value gap, which is of course right here. And now we enter a little bit in front of it, so by about a pip. Okay, whoops. And then a pip below the lows, right? 17.7, so 18.7, right? And then we target 2.5. Okay. Okay, so this one went without us, right? It's gone super far. So yeah, that one did not work for us. It went without us. You won't get tagged in on all of them, although the tag rate is pretty high. Because of the fractal change of character, you're able to identify the change of character early, and so you don't need to wait for this big move to happen before you realize, hey, price has shifted. Okay, so let's go on to the next day. Okay, so next day, we've already had this grab the high of the previous day. Let's go down to the 5 minutes. Hopefully the move hasn't happened already. Okay, so the low would be right here. So we need this to be taken out for a change of character. Why? This was the last candle that did not take out the previous candle's low. And we move it down because this is the lowest point, all right? So we have to wait for that. Or we need to wait for the highs to go again to get a new fractal change, fractal low. So does the highs go? Yes. Yes, definitely. So now we look back. And this is now our fractal low. Okay, so nothing here. Nothing, nothing, nothing. Okay. So now we break this with a wick, I believe. No, we're still within this, so nothing's broken just yet. Okay. Okay, we break it. Okay. So that is our change of character, okay? And now we look up to our highest fair value gap, which is right here. All right. Yeah. So let's place our entry right here with our down here. Whoops, this needs to be a bit higher, 1 pip above. Okay, 2.5. And let's see what happens. Okay, we tagged in, get a little reaction, and then we're out. Okay, so we take a loss. Right, so where are we at now? 3 wins. So That's 7.5%, and 4 losses. So we're 3.5% up. Okay, so let's go on to the next day. Bearing in mind we're on the 18th right now, so this isn't a full month. So hopefully we can pass. Okay, so now the highest point is up here. Okay, lowest point is down here. Okay, so we've taken the highs, we dropped down. Right, so our change of character point would be right here. This is the last candle not to take the previous candle's high, and then we moved up. Do we take out the highs here? So if you're confused about which one is higher, hover your mouse over and look in the top here. Under the H here, it says 661, and this one is 660. And so this one is actually higher. And so the last candle from this highest point that did not take out the previous candle's low is right here. So this would be our change of character point. All right. Okay, and we get that. There is no fair value gap. All of these gaps are closed. There is now a fair value gap right here. All right. So this is your fair value gap. You then place your order right here, a pip ahead. Okay. Whoops. You then place the stops just above with pip of breathing room. Okay. And then we target 2.5 risk reward. Okay, so we're tagged in. And there you go. So this one is a winner. All right, then we go back to the 1 hour and we look again. I don't think the lows will be taken. So let's go to yesterday. I think this was 17th. This was yesterday. If we get a win, I think it should be enough to pass. We'll go and count after this, see if there's a trade today. Okay. Right, so we take the lows and there's a reaction. Right, so let's analyze this a little bit. Currently, the highest point would be up here, okay? So we need price to go a little lower, probably, because I don't want such a big range. Okay, so we do take out this, and so our fair value gap at the extremity would be down here. Let's see if price gets down, because that will give us an entry. Otherwise, we're going to have to wait for the high to get taken, okay? And the highs do get taken in New York session. The last candle to not take out the previous candle's high was this one here. So this is our change of character spot. Okay, that gets taken quite impulsively. Now, this, if you look closely, there is a gap here. Okay, can you see the gap? There is a gap right here. Okay, so we would enter here with our entry 1 pip ahead and 1 pip above the highs. So what's the high? 5.3, so 6.3. And then we target 2.5 risk reward. Okay. Let's do this. And then we just set and forget, right? We set and forget. Okay. And there you go. So what happens in this trade? All right. So essentially, we get tagged in. Okay, there must have been some kind of news event at 8:30. Price does come down like a lot, so we get close to our target. We get to 2. You could have gone break even at this point, but we will take it as a loss. Okay, and that's it, right? So we continue. However, we can wait for another change of character once price comes below here and look for an entry. I don't think we will get it. Although we did come up higher here, okay? And we had a change of character here. So we took out the highs. And this is the low. Is it? Yes. This FVG got filled. This candle here is... This candle is the last candle to not take out the previous candle's high. It gets wicked. Okay, it gets wicked right here. As you can see, the wick comes below. We then have this fair value gap at the extremity. All right. And we go 1 pip ahead with a stop just above. All right. So let's see if this works out. Okay, we were basically at entry right here. And this one does work out. Okay. So that is something you can also do. It's the same as if you get an entry and you simply wait for the highs to be taken again, and you can look for a change of character that works. So this one worked out for us. This one did not. It got to 2 risk reward and then came back up on us. This one here then took the highs out once again, gave us another change of character, and then we got back in. All right. So if we tally this up, we've had 1, 2, 3, 4 losses. Okay, is there any before this? No. And then we've had 5 wins. All right, so we got 5 wins, which is, if I'm not mistaken, 12 and a half. And then we've got 4 losses. So that's 8.5%. So we would have passed. Let's have a look at today out of interest. I don't know if the setup has happened yet today. Okay, let's look at current price, right? So current price, we had this get taken out, okay. We've had the lows get taken out right here. Drop down to the 5 minutes. We had the change of character right here. And we would have entered on this FVG right here. And then we would have been taken out for a loss on this one as well. So we would have been up 6.5% so far this month, which is really not bad seeing as we're on the 18th. But we would have been able to pass already by the 18th of this month. So within 18 days, we would have passed the challenge. And by the end of the month, I'm sure we would have been able to make about 10% on the month, which is pretty solid. So yeah, guys, if this is my mechanical strategy that really works, go and backtest it, go and collect data, use FX replay to backtest because you can go back in time on lower time frames. You can go all the way back to last year and test it. I'm using it on GBP USD right now. It works on Euro USD as well, and you can use it on US 30 as well. But right now, GBP and Euro USD is really hot for this strategy, and it works really well. So until next time, guys, thank you very much for watching. Please do make sure to subscribe down below. And I really appreciate all of your guys' support. And remember to backtest your strategy. Cheers, everyone. See you next time.